We are starting the first unit of a video tutorial of financial accounting. Its goal is to illustrate an operating method to prepare balance sheets and income statements on the basis of information about the transactions that a specific company carried out during a given period of time. To do so, we're working on a case related to the company Copen Limited. The wording of the case describes Copen's area of activity and when it was established, followed by information about a set of transactions that Copen carried out in 2016. Finally, the wording sets the required outcome of the exercise: the balance sheet of Copen Limited at December 31st, 2016, and the income statement for 2016. The wording does not provide the formats to be used. That's why we should prepare them. First of all, the format of the balance sheet. As is apparent, we're not going to use the official format of the Spain's accounting norms. In this course, we're tackling financial accounting from a rather conceptual approach. That's why in this case we could use any of the existing formats. However, if the wording had required a specific format, we would have had to use it. When preparing the formats, it's not advisable to include too many items in the balance sheet. Only the main headings and some items that are always present, such as cash or capital, must be included at this point in time. But it's important to leave some space available for the items to be included later on in the process. The table should have 4 types of columns. The first type of column describes the different sections and line items, that's to say, accounts, forming the balance sheet. Besides those, 2 additional columns should be included in order to reflect the balance, that's to say, the monetary values of the different accounts of the opening balance sheet for the reported period. In this case, it's the balance sheet at January 1st, 2016. Since Copen was established on that date, all the accounts have a 0 balance. However, it's good to make it this explicit. The third type of column shows the balance of the different accounts of the closing balance sheet for the reported period. In this case, it's the balance sheet at December 31st, 2016. The closing balance sheet is one of the 2 results requested by the wording of the case. The fourth type of column is merely instrumental. However, these columns are particularly important because they allow us to justify how the partial results have been obtained. Computations for the determination of the balance of the different accounts are therefore shown in these columns. Finally, to conclude the presentation of this format, we are recalling the equations of the balance sheet. On the one hand, the balance sheet should always balance. This feature enables the detection of errors. Indeed, if once all the transactions have been recorded, the balance sheet does not balance, we can be sure that there are errors. Unfortunately, even though the balance sheet balances, we can't be sure that this is error-free. On the other hand, it should be taken into account that the closing balance sheet of a certain period is always prepared on the basis of the opening balance sheet of that period. Thus, the effect of the different transactions that have taken place during that period, expressed in monetary terms, should be added up to the balance of the different line items in the opening balance sheet. It's also interesting to recall that the opening balance sheet for a specific period is exactly the same than the closing balance sheet for the previous period. We're now presenting the format for the second financial statement that we should prepare in accordance to the case wording, the income statement. As noted above, we're not using the official format of the Spain's accounting norms. Just like the balance sheet, it's not advisable to include too many items in the format at this point in time. Just the headings and some usual items as cost of goods sold and depreciation. It's important to leave some space available for the items to be included later on in the process. The column showing plus or minus signs only intends to illustrate the usual sign of each item. It's not necessary to include them when dealing with an exam. Thus, consistent with their underlying concept, incomes have a plus sign while expenses have a minus sign. We will look into this in more detail below. The different earnings, EBITDA, EBIT, etc., have no sign because they could either be positive, when profits, or negative, when losses. Columns showing intermediate calculations should be included in order to justify how each result was obtained. The third and final format is totally instrumental. It's useful to record and organize an effective way all the collections and payments related to the transactions. It aims to facilitate the calculation of the net cash flow of the period. As in the two formats above, this table should include columns to show the intermediate calculations. Once all the collections and payments have been registered, this table enables us to easily calculate the net cash flow of the period, which in turn will allow us to calculate the final cash balance to be recorded on the closing balance sheet. In reality, it's yet a way to apply the above-mentioned balance sheet equations to a specific line item, in this case, cash. Strictly speaking, similar tables could be used to deal with any other account. So, why is it only advisable in the case of cash? The result is simple. Many transactions of scope and case imply collections and payments, what leads to act in a particularly organized manner. We are almost ready to start accounting for the scope and case transactions. But before that, let's present the outline of the operating procedure we will follow. We will analyze and post all the transactions by means of an iterative process. We start analyzing transaction number 1. We need to ask ourselves whether this transaction involves any cash flow, whatever its origin. If the answer is yes, we must calculate the eventual collections or payments and then reflect them on the cash flow table. Once we have done it, or if there are no cash flows involved in this transaction, we need to ask ourselves a second question. Did this transaction add value to the company, or alternatively, this transaction put a dent in the value of the company? If the answer is yes, we must calculate the eventual incomes or expenses and then reflect them on the income statement. At this point, we will ask ourselves a third question about the potential modifications in the company's belongings, rights, obligations, or capital due to this transaction. If yes, we will assess such modifications and we will record them on the balance sheet thereafter. Now, if there are transactions left to be posted, we will come back to the starting point of the process in order to analyze and account for them. Once we've posted all the transactions, we can conclude both the income statement and the cash flow table. Then, we will register on the balance sheet the net cash flow, the net income, and the accumulated depreciation. We're about to finish the exercise. We just need to sum up the balance sheet, thus completing the case. Let's summarize this unit. Firstly, we've described the initial step of the operating procedure, which is the subject of the present video tutorial, the presentation of the formats of both the balance sheet and the income statement. We need an instrumental format to calculate the net cash flow for the period. The income statement. It's useful to calculate the earnings of the period. And finally, the balance sheet. This will reflect the wealth status of the company on a given date, in this case the closing date of the period. In the next units, we will analyze and record every transaction reported by the above wording of scope and case. To that end, we will follow the operating procedure that we have already presented. We will find all the collections and payments specific to each transaction. Then we will record them on the cash flow table. We will also identify and calculate the incomes and expenses related to each transaction. Then we will record them on the income statement. Finally, we will try to find other variations in assets, liabilities, or capital related to each transaction, which will be eventually reflected in the balance sheet. Once we've analyzed every transaction, the cash flow table and the income statement will be completed, but not the balance sheet, because data from both should also be recorded on it. Indeed, as noted above, the net cash flow of the period that was calculated by means of the cash flow table should be added up to the initial cash balance, in this case it's 0, in order to calculate the final cash balance of the period. Then, the final cash balance of the period should be reflected on the balance sheet. Finally, and to close, the net income of the period is also going to be reflected on the balance sheet. The net income can be allocated to two different items. It could be either be distributed as a dividend to the shareholders, or it could remain in the company as retained earnings. In most of the cases, the net income will be divided into two parts, a dividend and retained earnings. Dividends can either be paid up before the end of the period or paid up within the following period. In the first case, dividends should be reflected on the balance sheet as a payment, whereas in the second case, they should be reflected on the balance sheet as a liability. Retained earnings should be reflected on the owner's equity. We will also need to update the accumulated depreciation on the basis of the depreciation expenses of the year, if any.